In today's video, we're going to be discussing how I'm using put options to protect my portfolio as the market approaches all-time highs. I've been getting a lot of questions on how I use put options to protect my portfolio. So I'm going to run through some of the logic and the put options that I choose in the portfolio and the strike prices that I use, etc. So we earn over 100,000 per year in dividends at this channel. Sometimes that number's off by 1 month. Yesterday you saw we were earning 144,000, so that can be off by a month at E-Trade. Okay, performance and value shows that we're up here approximately almost 50% for the year, 49.7. So we're up 50% for the year. The NASDAQ is up 37%. The SP is up 19%. And the Dow is up 7%. So we're beating all the indexes on both a year-to-date basis and a daily basis. Even though we're only up $200 today, that's still 0.03, whereas the market is down. The NASDAQ's down 0.52, the SP is down 0.2, and the Dow's up 0.22. And what do you know? The Dow's hanging in there. It's up when growth is down. So we've been rotating from growth to value, and there you can see that idea is working out well. Also, you can see we're up in the portfolio today a little bit. And that's because we have a lot of value to offset a lot of these growth plays. So the first thing that we're doing to protect the portfolio is I have Cornerstone here and I short against that with a box position. Okay. I've made videos on that before in the past. You can go see that video. Today, that's not what the video is on. Today, we're going to talk about put options. If you need help understanding how I get this performance out of my account, email me for my e-guides at akintodd48@gmail.com. I have e-guides on how to live financially free out of your brokerage account using the power of margin. For every $1 you put in your account, you get $4 of purchasing power. Okay, so I just use a fraction of this purchasing power, this 200 grand that you see down here below, to get ahead. That's how I'm getting the performance that you're seeing, and that's how I'm getting the extra income that you're seeing. My dividends of over 100,000 per year will pay back this debt in less than 2 years, and my account will be worth 700,000. This 500 will go to 700, and this 200 will go to 0, and I'll be left with all these dividend-paying assets to myself, paying monthly cash flow for life. Monthly cash flow also qualifies as income to banks, so you can get more loans and level up your account that way. You can't get loans off of day trading. You can only get the banks to work with you if you have a pay stub from a job or dividends. And that was the aha moment for me to start living financially free out of my brokerage account using the power of margin and dividends. I just use margin to get more dividends, which qualifies me for more loans. And the margin doesn't show up on a credit check. Plus, I can click sell at any time, and the interest on margin is low. It's lower than real estate, lower than a mortgage rate, lower than credit cards. So, and then the key is that I always just keep enough available withdrawal high. I keep this number high enough, this 220, so I can swipe out of my account and live freely out of my brokerage account, even though I'm in 200,000 in debt. I just use this equity number. Cornerstone here has an $8 market price, and we drip down here at 6. So 663 for the 28% gain, 652, 30% gain, 627, 36% gain. So we get thousands of dollars every month from not only the drips in Cornerstone, but we also get days gains here. We're up another 2,500 in Cornerstone today alone. We're up 2,500 Cornerstone today. So you get days gains, you get the drip gains, and you get the 21% dividend to live financially free out of your account with, because the 21% dividend pays your bills. Okay, it's enough to pay my bills. So Cornerstone, 5-star fund, and it beat the S&P over the last 10 years. You just have to learn how to play Cornerstone. You have to time it around its rights offering, and you have to ask for the special drip. So that's what my e-guides are for. My e-guides are on how to play Cornerstone, and my other e-guide is on how to live financially free out of your brokerage account using the power of margin. When you buy all of my e-guides, you also get access to my Discord server, which is a chat room, and I alert you of the Cornerstone rights offering in Discord. So in this channel, you don't have to worry about... I just made a video actually on Cornerstone. Is it too late to buy Cornerstone? Well, when you're on top of the rights offering, I don't think it's ever too late to buy Cornerstone, because we just use the dividends to cash flow the investment. We don't care if the market goes up or down. We just want the dividends to pay the investment back. A 20% dividend times 5 years is 100% payback. So Cornerstone RO, we have the daily trade recap. We have an options channel, a margin channel, a drip channel, a Canadian channel, yield max, retirement, lesser known dividend plays, etc., etc. So when you buy my e-guides on Cornerstone or on margin, how to use margin, you not only get Discord access, but you also get my phone number. You can call me anytime. I'll sit there and walk you through your portfolio and set it up just like mine. So Cornerstone, okay, we all know, we just made a video on that today, this morning, that we all know that it's a strong fund. It's why I have 500 grand in it. and I don't think it's too late to buy it. But the only reason why it might be too late to buy Cornerstone here is because the market is high. It's melting up. So we boxed Cornerstone, and we had another video on boxing if you're interested. But today's video is just going to be on the options, okay? How do we use put options here to hedge our portfolio? So this is my logic behind it, okay? So first of all, I'm going to go in and trade because I'm gonna buy some new options today. We just started the new day of August, the first day of August today, the new month. So these put options were already set for August. Now I'm going to do some new put options for September, okay? And I'll walk you through how I do this. So first of all, QQQ, we go to put option here, select put. We go to buy open. Okay, market order, I always go market because they're liquid. And now I'm going out to the end of September, and I'm choosing a 320 here, okay, a 320. And I'll share with you why in 1 second, okay, QQQ 320, okay, $87, buy to open, and look at the volume. There is no volume, but I don't care, and I'll share with you why, okay. 320, okay, buy open, place. Okay, now, and those are still liquid, so I don't care if they don't have much volume in them. Okay, place another trade. Okay, we're going to go to SPY. Okay, and we're going to do a put option here. We're going to select put. We're going to say buy open, market order, August. We're going to go out to September because I always like to have a fresh month ahead of me so that they're potent. So if it gives the market time to wiggle, and also those will move very big for you if you go about a month out. So 420s for SPY, okay, preview, volume there only 2. Again, I don't know why the volume is so low on these, but 420, okay, this is why I'm doing 420. Ready, buy open. That's still pretty expensive, but it's my next month's insurance, so I don't mind having it on. Ready, buy open, place, okay, buy open, place. Now, if I'm wrong on these put options, what happens? Nothing, okay? Nothing, because if we're wrong and the market goes higher on the long side, then we're really going to clean up, okay? Yesterday was a $10,000 up day. Today, we're actually still up when the market's down, which is surprising. But again, that's that's a testament to Cornerstone, and that's due to Cornerstone's strength here. So, okay, I bought those options. Now they should be reflected down here in the account, okay? SPY 420 and QQQ 320, okay? Why did I choose I got $300 worth of insurance on for next month, September 30th. So that's about what I pay in house insurance or car insurance in a month. And this is no different than a house, in my opinion, that I have to protect. So I already have these QQQs, these August 400 and 340. Let me walk you through why I chose those strike prices. So if we go to a chart, okay, of QQQ, all right, if we go to a QQQ chart, you'll see that the support area, okay, the support area for QQQ is here at 320. That orange line is the 200-day moving average. That's why I chose that strike price. Because when you choose options, guys, okay, I'm choosing them I'm choosing them far away from the strike price. Okay, the 375 market price that you see here, 382. I like to go a little further out into the 320s. Because then you get cheaper insurance. Obviously, the further you go out, the cheaper your insurance is. But the further you go, guys, the worse your delta gets. Delta is the correlation between the stock and the option. If you buy an option, if you do a put option on QQQ at 382, then your delta will be 1 for 1. But the further you go away from 382, your delta gets worse to where when the stock has a movement, if QQQ goes up, your put options go down by a lot more. So you have to watch out for that negative delta. But the reason why I choose the 325 area, this orange line, is because there's a lot of interest there. Okay, you didn't see any volume now, but there will be volume there because when the market falls, people will be looking for that support area to be held at. So 325 is where I choose my strike price for QQQ. And if we blow past that's about 10% away, 375 to 325. Remember this, 457 to 400, but 375 to 325, 375 to 325 is 13%. So that's asking for a huge move, okay? That's probably why there's not a lot of options there, okay? There's not a lot of volume at the 325 because you're asking for a 12% move in 1 month. But I'm not worried about a 10 or 12% move in a month. I don't think that's going to happen. I'm only doing this for black swan insurance. If we do truly have a black swan, then we'll fall more than 10% in a month. We'll fall 20%, 30% if it's a true black swan. If it's a gradual decline, then I don't care, because we earn 20% in dividends. So 20% in dividends takes care of a 20% decline in the market over the course of a year. So I'm only concerned about crash insurance for the next month, okay? Always for the next month. Even if I lose that $300 in put options, I'm still always making my $100,000 in dividends. So now we're down 500 for the day. That's more like it. The market's, we're starting to feel some pain as the market pulls back. Okay, now let me explain with you my logic with SPY 420s, okay? So SPY, it's the same logic as QQQ, 420s, right? Okay, so let's go to the market price here, 456. We got a 456 market price in SPY, and look, 420 is that orange moving average, that 200-day moving average, the all-important moving average. So that's why I'm choosing, and we're overbought, of course. We're in the gray area. So that's why I'm choosing to short SPY here. That the 420 area is the 200-day moving average, which should act as support. And that's where a lot of people will have their put options looking. People will put their strike prices there looking for the market to tag those prices. Okay. 456 to 420. Let's go do that math. 456 to 420. 456 to 420. Okay, that's about 8%. So we have 12%. We're about 12% out on the QQQ puts and about 8% out in the SPY puts. So the market would have to fall 8 to 10% for these prices to be reached. Okay, which is again totally likely in a black swan event. So okay, that's what I'm doing for my options, guys. Okay, I have August options on for this month already. Okay, we're barely down today still as the market's down. And again, that's just a worrisome sign to me. It's like a game of musical chairs. So how do I protect? Yes, I have my short on for Cornerstone. I have a box there. But I'm just using my dividends, guys, to protect me. My dividends pay back all losses. But for the next month, that's over the course of a year. But for the next month, okay, you could have some kind of black swan, which I don't think is going to happen. I only add to these shorts so I can sleep at night. Okay, I don't think we're going to get a 10% correction in 1 month. Okay, if we get a 10% correction over the course of 2 or 3 months, then again, our dividends just pay that back, and it's not even a big deal. So this is the logic, okay? You want to buy put options just as insurance. I have a section in my Margin E guide on how to protect your portfolio with put option insurance. But I just felt like sharing some of that section with you today out of the Margin E guide because the market is near all-time highs. We're up 50% for the year, which again is alarming. And the NASDAQ is up huge. I mean, the NASDAQ's up 37%. The S&P being up 20% is also huge. This is not stuff that you see in a typical year. So I'm not worried about any of this, guys. I'm hedged with Cornerstone. I'm boxed with Cornerstone. We have our dividends to pay back everything else. We've been rotating from growth to value. We've been buying a lot of these healthcare names, which are probably either up today or down fractionally. So AbbVie down only 0.1. Okay, so that's why we bought these healthcare names, so that they might not be up on a down day, but they'll be down fractionally on a down day. So I hope you like this video, guys. Do you understand what I'm saying about the options? I have my new insurance on for the month of September. Since August, we reached the first day of August today. I'm gonna let these old puts go in August. In August. Maybe I'll get a break even back on these. I don't care. I consider them a sunk cost every year, my insurance and my portfolio. Because if I'm wrong on my insurance, again, my long side is cleaning up. And if the market falls, 10% in a month, then our put options here will make a killing, more than we lose in our account, because they're potent. They're only set out to a month, and their strike prices are not that far away, considering a black swan event. And if we have, again, I keep repeating myself, if it's more drawn out, then we're not worried about anything, because there will be no Cornerstone rights offering as the premium falls, and our dividends will pay back the rest of our losses in the market. So that'll do it. I put the strike prices at the support areas, those 200-day moving averages. That's where I put those new strike prices for the month of September. I put them not too far out so that the delta wasn't too bad. Please tell me also if you can recommend me a better way to do put option insurance. I'm always open to hearing those suggestions because I'm not a big options guy. Okay, all I know is that when I shorted during 2022 with options, I did terribly. Okay, they didn't make much money because it was more of a drawn out decline. And whenever we had some crashes within 2022, my put options only made like $1,000 or $2,000. That was nothing for me. I kept them on just to see if they would compound to something bigger, and then the market would kind of meander around, and I would lose to time decay in these options. So they're very tricky. It's very hard to make money in short options. I'm only using them for crash insurance for the next month or two, and I let my dividends and Cornerstone shorts here take care of all the rest of the legwork, okay, and protect me from the downside. So click like or subscribe if you haven't already, please, guys. Leave comments in the section below if you have those suggestions, and also email me for my e-guides at akintalk48@gmail.com if you want more help playing Cornerstone or living financially free out of your brokerage account using the power of margin. And I'll talk to you soon. Thanks.